All right, guys, welcome back to the show. I want to talk a little bit about trailing stops. One of our new subscribers, I think his name is, if I'm correct, Shazad. He asked, so I can't pronounce your first name, my bad. But he asked a nice question, so I'm going to answer that as well. But at the same time, I'm going to kind of demonstrate something to you that will totally make sense, right? So normally, someone who's going to talk about trading stops or anything to do with charts or trades will sit down in front of a computer and show you how it's done. That's because that's the only way they can do it, right? Even for themselves. Now, when you get to a point, like you practice, and you have to practice, right? And you practice enough and you master it, you can do it like I'm doing it right now. It's all in your head. It doesn't matter what platform you're using, provided they have the means for you to do a trailing stop or even a normal stop loss or whatever. You can master it and you can now use this wherever you want. So for this, if you are following through, what I would say, go to Binance and just use Binance for now. Find something small, $10, $20, $100. I think $10 or $20 is the minimum you can do a trade on Binance or something like this. Just go and do it. Doesn't matter what it is, whether you're doing a leverage trading or whether you're doing a spot trading. You just go and do it, right? And practice, right? And so, other than that, understand where I'm coming from. So this brother's asked a good questions. He said, can you please guide usually what delta we should use in trailing stop during bull bear market and when market is moving sideways or for main coins, mid caps and low cap coins as well, right? And he's asking about what time frame: 1 minute, 15 minutes, 1 hour, 4 hour, 1 day, right? Now I want to explain all of this to you like a pro, right? Sitting here without a chart, so you understand what we're talking about. Trading is all about psychology. Trading is all about strategy. I've talked about this many times. You need to have discipline in what you're doing. So if you have a budget, $100, for example, that's the budget. You don't go above that. And if you are going to set up a stop loss or trailing stop, your stop loss should be around a small percentage, and we're going to talk about that. Percentage is the delta. We're going to talk about this, right? Because it does kind of vary, and it's a good point you've made about low caps, mid caps, and high caps, plus bull markets, bear markets. You're on point, because each scenario differs, right? So I'm going to try my best to explain here. I might not get it 100%. I'm not going to show you a chart to show you this, but if you do want one on a chart, let me know. I will happily show you on a chart how it's done. But that's the amateur stuff, right? When you know what you're doing, when you have perfect discipline in the market, when you know exactly when to enter, exactly when to hold, exactly when to sell, right? You have a strategy. You know when your stop losses are going to come in place. You know when you're going to set it up, because you don't set it up every single time. Sometimes you do it at the time when you buy, and I'm going to explain that as well. And sometimes you set it up a bit later, right? So it's all about strategy. And then obviously with that strategy comes risk management. That's what you're doing by default. You're managing your risk. You're saying, right, I'm going to put $100 in, but I can only afford to lose $5. I want to make sure I don't lose a penny more. All right? Discipline, strategy, risk management, DSR. I always say that is the perfect triangle. So you do make a triangle. That's it. Illuminati triangle, whatever you want to call it, right? It always works, right? So let's get into this and let's talk about this now that I got this over. Also, by the way, guys, anything I'm about to say here is not financial advice, all right? It's based on the experiences that I have and what I tend to do in the market. Most of you guys who have watched my videos for a very long time, right? And I love you guys to bits, right? You guys come on and watch all my videos, and it doesn't matter if it's 5 of you or 10 of you. I know who you are. And I know that you guys come and watch all my videos and you always like and share whatever. So I really appreciate that, right? You guys know very well that I've talked about this many times, that I only do major trades once or twice a year, right? Once or twice a year. And a lot of people haven't actually clocked on, why does this guy only do 1 or 2 trades a year, major trades, right? But yeah, I do minor trades here and there. The minor trades are where I would use my delta the most, right? So, and kind of relates back to your bull market, bear market scenario. So let me explain. During a bear market, I personally don't short the market, right? I can if I want to. I don't short the market. It's a little bit more risky. Yes, the potential of making a lot more money is higher, but the risk is also high. So anything where you see a high potential of making a large amount of money, remember your risk is also that high as well, right? So I don't take risk. I'm not stupid, right? I don't take risk because my portfolio is balanced all the time. But during a bear market, if I think we're hitting a bear market bottom, right, then I'll go and open a trade, right, and I'll sit on that trade for as long as it takes. You also talked about like how the exchanges, I think what you were talking about, do they charge fees and whatnot, right, when you open a trade? On a if I do a leverage trade, yes, there's a margin fee that I have to pay, and it's usually paid per day. Some exchanges may defer that, they might have a fixed amount or whatever. But when you're doing spot buys, it's always fixed. When you're doing a spot buy or a spot sell or a spot trailing stop, too many bloody S's. But that's usually an amount they will show you. Whatever currency they're going to charge, they're going to say, right, that's how much you're going to pay for this transaction on average, right? And you can just add a 1 or 2% to it. Worst case scenario, it doesn't trigger exactly where you want it, or your trailing it fails or whatever. You got to monitor those things. But when you do a trailing stop or when you enter a trade into any currency, you must have targets, right? Your targets are going to be your alerts, right? So say, for example, you say, I'm expecting this to go to $100, but I want to exit around $95, right? Or I want my trigger to activate around $95. So you need to have an alert at $95 so you know that it's come to that level. Because a lot of the time when the market starts moving, you might not actually, your order may not be filled. And if your order is not filled, then you need to go in and manually execute that order. So not all trailing stops are going to activate for you. Like a lot of them, they will not activate because the market moves so fast, right? If there's a massive liquidation event, you could the whole market could go way beyond you and nothing will trigger. So it doesn't fail, but it's just didn't trigger because it went past it too quickly and the order never filled, right? That means on the way back up, the order may fill, but then on the way back up, we might be now going to $200 and you don't want to lose that opportunity and you want to sell. So that's why you need to have your alert set up. So it's a whole strategy in doing this, right? And if you do it right, if you master it right, you're always going to be a winner, right? So that's that. Now, you talked about minute, 15-minute, hour, 4 hours, and daily, and I want to go into this a little bit, right? You say, for example, you're in the deepest of the bear market, the bloodiest of the bloodiest, and you are seeing a potential trend reversal. In that scenario, you go in, right? You can either put a trailing stop or you just buy and you just sit back and relax because you know the market's going to be doing a full U-turn and going back up again. It's not necessary you put a trailing stop around that area, all right? Because you are at the bottom. You can't go any more bottom than that. And if you did, if there's a currency you picked up that's you think is going to bleed down even further, you shouldn't even be in it, right? You shouldn't even be in it. I wouldn't touch it. I'm just giving you an honest opinion. I wouldn't touch it. There are coins that I've seen who are, ridiculous prices, currently sitting 99.99% below the market. If I bought something, I wouldn't even put a trailing stop on it. It can't go any less. Something that's gone from $100 to a penny or less than a penny, it literally can't go any less than that, right? It's a dead project. I wouldn't even touch it. But even if I did buy it, I'll probably put $10 and forget about it, right? If it comes back, it comes back. If it doesn't, it doesn't, right? So that's what I would do. And when you're trading these time frames, now this is another thing that I always say as well, guys. You got to know your time frame. So if you're buying at the bear market bottom and you know that it's going to take 4 weeks, a month, 2 months, it doesn't matter. Your trade could stay there, like you bought it and it could be there for 5 months, 6 months, doesn't matter. So that is your time frame, right? And you obviously need to know when you want to exit. Again, you set up, or if you want to, but if it's a long-term buy, you don't need to worry. You set up your stop loss at the time when the market's starting to pump because you want to lock those profits, right? Anytime you want to put your trailing stops, you want to put your lock your profits. Now, stop loss is different, right? Stop loss is I've put $100 in. If I lose 5% of my money, I want to get out, right? And I'm going to get to the percentage part in a bit, right? And I'll explain this to you. So that's your long-term trade. Now, short-term trade, say for example, you've seen something and you're looking at the charts and it's a daily chart and you want to trade that and you say, oh, I'm going to trade this for the next 2 days. I want to do a long thing. Yes, you get into that, you have your strategy, you see the trends, you see how the patterns are, and you set up a straight trailing loss accordingly to whatever. But at that time, you got to understand the patterns and you got to identify what are the swings. So there's a coin I was talking about a few weeks back. I was talking about how it was doing 10% up and 10% down pretty much every other day. So I knew that was a pattern. It was an identifying pattern. This is a 10% swing. So I can easily make a 10% swing. Now, if on that particular coin, if I know I'm going to go up 10%, my delta would be a little bit more closer to say about 2%, something like this, because I want to go up 10, but I don't mind losing 2% on the way up. And I'm not even losing, I'm actually banking, so I'm profiting 8%. I want to keep 8%. That's the key here. So I want to activate around the 2% mark and I want to get out. So I keep 8%. Every trade, if I can do 10% up, I know the pattern's there, I can then keep that, right? And I'll tell you another little thing at the end as well, so that will make total sense to you, right? So it's all about cashing up, banking the profits for as much as you can, because you want to reuse that, recycle that, provided there's a pattern going there. Now, say for example, you are a daily trader and or just say once a week you sit down on your computer and just love trading, right? Brilliant. You give yourself 8 hours. When you're in that 8 hours, you don't trade the 8-hour candle or the daily candle or the 12-hour candle. You don't trade you don't look at coins above your time that you're going to be there. You look at the time frame that's inside your time. So if you're 8 hours, you look at 6 hours, you look at 4 hours, you look at 2 hours, 1 hour, 45 minutes, whatever. Anything lower than 8 hours, that's the candle you are trading in, because you need to find the candles inside your time frame, right? And you trade that. Again, if you're sitting there and you see a pattern, you identify it, you can now go in and say, right, this coin is doing 30% in, it's got potential to do a 30% pump. Well, then what you do, you put a slightly higher delta, right? Because you want to get up, because anything that can do 30% can easily do 40%. So you're using a little bit of logic there as well, right? And you want to cash in as much profit as possible. However, if you think there's a coin that isn't going to do that well, the performance is going to be kind of sideways, right? So we're getting into the sideways part as well. It's going to move sideways. You want to keep that delta tight as possible, because any second now, it's like an elastic band. It could either shoot up and then you cash as much as you can, or it could easily go all the way down, right, to a lower level, a lower support level, or, you know, a higher resistance level, whatever you want to say. But you want to keep it tight, so that way you exit. As soon as you think the market's shifting a complete different direction, you want to exit as fast as possible. You can trade a simple 1 second candle, right? 1 minute, whatever you said, like 15 minutes, 1 minute, whatever. You can trade that. That's not a problem. But stick to that candle, right? And if you think that that candle is going to do a 10% pump in a single candle, so you're looking at a single candle, a 10% could be a penny, it doesn't matter. Look at that. Again, keep your range as close as possible, because you want to exit with the maximum gains, right? Now, remember what I said about in the beginning, I said about the long-term ones. So here's a coin I see that I think is going to do 100% pump. Means that over the next 5-6 weeks, 2-3 months, whatever, the price is going to double in value. When I know the price is going to double in value, right, and that's what the strategy tells me, it's going to double in value, my delta is going to be slightly higher, right? So higher as in, if I'm going up and I know it's going to do 100%, I don't mind losing 10% from the way down, right? And banking 90%. Do you know what I mean? So the delta is going to be a little bit more heavy, because the market, as we go up, we're going to do steps, right? We're going to do steps. And per day, it might do a 10% correction. It might do an 11% correction, right? Every other week, it might do a 10%, 11% correction. But we don't want to be kicked out. We want to continue. So if we want to continue, we need to keep the delta a little bit higher, because we don't want to get kicked out. Give you a good example of this. A friend of mine the other day, he was talking about something, and he said, look, I've put my stop loss in, the trailing stop, and I've put it around this particular level. And I laughed at him. I said, don't, you're not trading Forex. He had it set up around 0.5%. I said, no, you don't do that, right? And he's doing it on BTC. I said, you don't do that, right? So he made a mistake. He realized that straight away. I said, don't do that. What you need to do is have at least 5%, right? And the more the merrier. If you've made a significant amount of profit in this, right? So you've doubled your money. It's okay to have a delta that is bigger, right? 10%, 11% is bigger. that gives you opportunity to continually grow while the market continually corrects and checks its resistance and support levels. So this is what it is now in a bear. So this is kind of like, it kind of involves bear and bull and side, right? So the whole thing, right? So let me break it down for you and that will make sense. When you're buying at the bottom of the market, that's a bear market strategy, right? You want big, long deltas. You want to move forward, right? And I'm going to get into the low cap, short, mid caps and large caps, right, in a bit. That gives you the best opportunities to make the maximum gains because you just bought it in a bear market, right? So most people will say buy in a bear market, hodl, red candles, I love them. You buy, you hodl, and then you move up with the market. But that's a long-term strategy. You don't really, as I said, you don't even need a delta. You don't need to set up a trading stop there because that's the most stupid thing to do. If you know the market's going to be in a bull run, it's about to pump on a particular coin, especially the large caps, just sit back, relax. But when you think you're hitting a threshold, you're coming to a level, like right now, I'll give you an example. We talked about a few weeks back, right? I talked about this. I said, guys, the market is showing me a range between $53,000 and $58,000. So I know my range. I've identified my range. The last local high we had was 52,800. Guys, I was off by 200. I apologize, right? I wasn't bang on, on the spot, but that's the range. Now, if I knew it was going to be 53, would I set my sell order at 53 or above 53? No. If I had to do a strategy, it would definitely be a little bit less, but I haven't, by the way. But I would set it up less, right? In fact, I've called and messaged a few friends and people that actually I manage for and I help out, right? I've said to them, don't sell. It's guaranteed. It looks like it's guaranteed it wants to go to 58. Now, after 58, I didn't say anything. I said up to 58, it looks okay, right? The market seems to be wanting to go there. That's the range. We're going to get in there. It's going to be really volatile, but don't get kicked out of the market because your delta is so low, because you put a trading stop, because you want to make that small amount. Also, the other thing you got to look at is when you're getting in and out, right? You're saying, okay, I'm going to get in and my delta is going to be tight, but I know this coin is going to perform well and I'm going to buy it a little bit cheaper. Guys, factor in the fees you're going to be paying as well. Because when you're selling, you're paying a fee. When you're entering again, you're paying a fee. Does that outweigh anything? Unless you make a nice little chunk, like 10-15% profit, it doesn't outweigh those little marginal things you're going to do. When you're going to do a 1% up and a 1% down because you're panicking, you want to keep that. It doesn't work, all right? When you invest money, you got to do it in a particular way, right? So that's that. Now, that's high cap coins, right? So when you go to mid cap coins, similar kind of a strategy, similar kind of a delta position, you would put a higher delta position, right? But this is where things get a little bit crazy. You have to identify the good ones. I call them the blue chips, right? BTC is the king, right? And the rest of the other ones, I call them blue chips. You got to identify the blue chips. Where are the people plugging their funds in? Where are the most amount of people holding those coins or left their money and they're holding those coins, right? Where are people interested? In fact, if you just look at the daily liquidation charts, right? What are people trading? That's the mid caps that you should be looking at. It doesn't matter if it's on the page 400, because remember, we have plus 2 million plus coins now. So it doesn't matter what pages it is on coin market cap. That's irrelevant. What are people longing? What are people shorting? Where are people getting liquidated? Because that's where the opportunity, that's where the interest is. That's our mid caps, right? Now, I hope that kind of makes sense, right? And then when you look at low caps, right? Low caps are a whole different story. Low caps are usually brand new, fresh coins or previous legacy, old school coins, which have dumped so far that they're beyond repair. However, people are still holding them. So similar like the mid cap, people are still holding them. People are still trading them, but they're not significant enough to show up on the liquidation charts, which is fine. And for liquidation charts, guys, use CoinGlass. I use CoinGlass. You can use it for free. It's brilliant. So you look at that and you see these coins out there and, yeah, they're great. And on a single day, they can pump like 30%, usually pump and dumps, right? But for those pump and dumps, you want to, say, for example, you see this curve up, right? And it went to some ridiculous price and then it came down to the floor, right? And it's now going sideways like this, right? It could be still pumping while it's still moving sideways, but the interest is so low. So if you can, like you buy it on a flat line, right? And you say, right, you put $100 in. and you say, right, I want to sell it when it pumps up. You want to keep a tight delta, but say around 5%. I don't like to give numbers, but I would say around 5%, right? 5% is a good number. So if it pumps up 30% and it comes down again, then you banked 25%. Do you know what I mean? Remember, the strategy is all about keeping money. You've got to keep those profits locked in. Worst case scenario, if the market flips the opposite way, you have a stop loss, 5%, boom, you're out, right? Always remember this, right? So, be prepared to lose 5%. As I said, this is not financial advice. Be prepared to lose 5%, but on the way up, don't worry about the max, because the max may be 30%, but try and bank 25%, right? Or max may be 10%, try and bank 5%. Do you know what I mean? You're still in profit. You're not hodling, you're not risking it, you're not losing 5%, you're actually up 5%. And you can rinse and repeat that all day long, and that's the kind of strategy I talk about, where I say, guys, if you, on average, if you can pay your fees, do whatever, and still keep 1% per day, right? Even if you trade for 10 minutes a day, you can keep that. You're in profit, right? You're the boss, because you've just made 365% a year, right? If you traded 365 days, that is. Or if your strategy is a little bit more aggressive, right? And say, and you say, right, I want to make 5% a week. Fine, right? Or 10% a week. 10% a week is what is possible, right? So you make 10% a week, right? You say, right, I'm aggressive, I want to get in there, I want to make 10% a week. That's 520%. It doesn't matter what time of the market we are, whether we're in a bull market or a bear market, right? It doesn't matter. Do you see what I mean? But yes, the largest gains are going to be made if you buy during the bottom of a bear market. One other thing I want to mention this, and I know a lot of people may not like what I'm about to say, but it's a hard reality, guys. More and more people are interested in crypto during a bull run. More and more people are interested in crypto during a hype phase, a parabola phase. And it's sad to see this, right? Those of you guys who have watched me from the past, even now, those of you guys who are watching me, you should know this. I've constantly mentioned this. I love reds. I don't like a green. I sell the green, I buy the reds, right? And that's a generalization. But the fact is, I buy the bloodiest. I am the most excited when I get to see the market below a certain level, right? I'm the type of a guy who shouts and screams to people and says, I only say it once. I'll be like, guys, sell your house, sell your property, sell everything, right? And go and buy, right? Go and buy BTC, go and pick whatever coins you want and just stick with it. Don't change your mind. Just stick with it. Watch what it does, right? And it would do that. And people would do 4x, 5x, 6x, 7x, 10x, right? Think about it. And this is even before the parabola started. Some people have already done a 10x on some of these projects we were talking about, right? So yes, there are gems out there. Also, when I identify coins, there's millions and millions of coins out there, right? I look for narratives. And there are some real small cap coins out there. I look for narratives. I'm like, okay, I like this narrative. This has a potential, right? And I'm going to stick with that potential. Give you a good narrative, right? Sam Altman, the creator of ChatGPT, obviously they're gone public now, they're not an open source anymore, whatever, they're a for-profit company, but he created a coin called WorldCoin, right? A lot of people, I have a theory, right? I think it's all connected. This WorldCoin, this ChatGPT, they recently received, I think, Sora or Sarah AI, whatever. They're all connected, by the way. We're not going to see what he's doing now until in the future, maybe 5, 10, 15 years down the line, we're going to see what he's about to do, right? But for me, none of that matters. I don't care if there's a global conspiracy that he's trying to take over the world or he's trying to get AI to do whatever and this and that. The day WorldCoin launched in UK, right, I actually went over, I made a video, it's still there on YouTube. I made a video, I interviewed one of the workers there. There's a girl there, I interviewed her, asked a whole bunch of questions regarding privacy and where my data is going. That's what I was concerned. I didn't care about what else it was. I went there and I did what I needed to do. And I said, if AI is going to take over, if someone wants my KYC, what have I got to hide? I'm going to go and get it. So I went and got a whole bunch of WorldCoin, right? Because I saw the narrative. I was like, okay, I see what this guy is doing. He's not asking for any money, right? You can go and buy it openly on an exchange, and people did. In fact, I too, like $2.50. You go and buy it. Today it's sitting at $7. That's 3x your money. plus the free money that I've got. And I think free, I've got so far around $700 or $800 free from them. I'm not concerned about the free stuff. I mean, I've been dumping them, right? But the coins that I've bought, that's up 3%. 300%. I'm okay. Do you know what I mean? So I've just 3x my money. I ain't complaining. I can now take my initial out, which I am, right? So I'm going to take my initial out because a friend of mine asked me how high could it go, and I said to him, dude, I'm just being logical here. What I'm doing is looking at the total supply currently available, right? So circulating supply is 130 million coins. The total supply of the project is 10 billion coins. Looking at the current price multiplied by 10 billion, that gives us an valuation of around $74 billion. Not a problem. I ain't complaining, right? But I'm being realistic. You know, I'm not saying we're going to go to $100, $200 because you got to multiply $100 by 10 billion tokens, right? Or if you think it's going to go to $200, you got to multiply it by 10 billion tokens and then look at what the market cap would be. That's where the number is. And I'm like, that doesn't work with me. That's not realistic, right? You know, you're looking at a project that came out where a lot of people are iffy about it. Somehow they're managing to pump, and I think I know exactly how they're pumping, but I don't care. I'm monetizing on it. If they do get to $100, right, that's $1 trillion market cap for a project. That's going to be a record breaker. Even BTC couldn't do it, you know, in the length of time that it's been around. Obviously today it is, but the point is it had to get to 36,000. Sorry, I'm talking about pounds. It had to get to $52,000 today to be just over $1 trillion. And this coin can do it at $100. Think about it. So what happens if this coin pumps even further? All right. So there is a high demand, but remember, out of 10 billion tokens, there's only 130 million in circulation. And that's what's giving all the price, right? And, you know, Sam Altman being who he is and having the connections that he has, right? And I'm talking about the big boys out there, including Microsoft, Elon Musk, whatever, right? A few other people. I wouldn't be surprised if they are manually manipulating the prices. I wouldn't be surprised. But I don't care. If I'm making money, why do I care? I want to cash those profits in. Does that make sense? So I see the narrative. I see what's going on. Fine. You know, I bought early. You pumped it for me. Happy days. I'm going to make the money. I'm going to get the hell out, right? That's the key here. So like today, I actually, the remaining coins that I have a few more on the WorldCoin app. I transferred them over and I've put them onto the exchange. This is like about an hour and a half ago. I put them on the exchange and I put a trailing stop. I said, right, prices, at that time it was $7.40. I said, if price goes to around $7.10, activate and put a 5% delta. And I said, sell. So now it's going to continue. If the market shifts by 5%, it will sell for that price or better. That's what the delta is. It's just giving you that cushion to say sell at that price or better. Either way, if I can bank $7, right, I'm still like almost 2 point something times up. Do you know what I mean? Like 2.7 times up or something like this. I'm still in profit. I can use the cash, rinse and recycle, because what goes up will come down. So we identify that as well. But as I said, there are coins that I want to hodl until the blow off top. That's where I would sell that. So I hope this video kind of made sense to you. And this is one of the reasons why I wanted to do it without a chart in front of me. So you guys understand that doing a trade, right? Getting in, trailing stop loss, buy, sell, whatever. And also I wanted to add something else as well. A lot of people don't know this. You can actually use trailing stop to also buy, right? You can activate, so you can leave cash there and activate a buy. So if you want to automate your buying, you also can use a trailing stop to do it. So a lot of people know about limit orders, but what you don't know, you can also use a trailing stop to buy, right? If the price goes in a particular direction, I want to buy, right? Activate me, buy. If you think it's moving 5% below the market and you're like, right, I think there's potential, you can use that same technique to buy as well. So remember this, guys. But yeah, other than that, look, I hope this makes sense, right? If you don't have the entire strategy planned here, right? If you don't have it all here first, you're not going to be able to execute it on the chart. Because once you open the chart, when you see the coins, when you see the price, when you see where it is right now, you are going to be overwhelmed with loads of emotions, right? Emotions could be shit. I'm missing out. I'm missing out, right? This market's leaving me. That could be an emotion. Your emotion could be, oh shit, this has come to the bottom. It might go down even better, even more, right? It might go lower. Should I enter now? If I do, I might lose money. These are all emotions, right? None of them matters, right? When you have the strategy here first and you've already made your mind up, your decision was already made, right? You know what price you're going to enter. You open your chart, you do your trends, and you say, right, this is the bottom of the trend. This is where I want to buy. And I feel it's going to do a reverse up from this point. So at this point, if it's my entry point, then I want to put a stop loss below this for 5%, right? Averages, I always say 5% is a good number for crypto. Of course, if you're doing shares and stock, then you want to shrink that number. It's not worth it, right? They don't move as fast. But crypto, we could have a single candle moving 10%, right? A single candle. And that 10% is not based on the entire price. It's based on the previous candle, right? Something like that. So just understand, it could be based on a daily, and the candles can move 10% up and down within a certain margin, right? So understand this. So you got to make your mind up, and you got to say, right, that's what I want to do. That's where I want to buy. And I've got my strategy. I'm going to put my stop loss here, or I'm going to exit, whatever. And then I feel the market's going to go up. And if it goes up, I want to trail it XYZ and see how much I can bank in, because that's the whole idea. But I also know what my exit price is, right? So you know your exit, you know your entry, you know your stop loss, you know how much you're going to make, and you're the boss, right? You're the boss. And I would always recommend to anybody who's new, start small, $10, $20, right? I wouldn't say more than $20. Practice that whole thing, because it's not how you do the trade, it's not what you trade, it's your psychology that matters more, right? Your perspective that matters more, right? You know, long-term coin, short-term coin, bottom of the bear market, top of the bull market. Like right now, if anybody enters, I'm highly recommending, I'm like, guys, first of all, I wouldn't buy anything on a parabola, but if you do see a dip and you want to buy something that you like, you get in and you put that stop loss immediately. Whatever the case is, doesn't matter. You put a stop loss that if it goes below that, I want to get out. Now, also, talking of stop loss, you've bought a coin, hypothetically, you bought a coin for $100, right? You're up 10%. You didn't set up a delta, you didn't set up a trailing stop, you didn't set, but you did set up a stop loss. So you bought it for 100, you said, when it gets to 95, get me out, right? I'm willing to take 5% loss, get me out. But the market's gone the opposite, positive, and it's now $110 or $120, right? But your stop loss is still at 95. What you do then is you go back and you manually adjust it. You say, right, I'm at $120, for example. I want my stop loss to be at $110. Exit me at $110. What that does is you're moving your stop loss up, right? It doesn't cost you anything. But at the same time, you're now cashing in 10% more than you had before. So your stop loss needs to continuously move. Of course, that requires a lot of monitoring. For those people who want to do it, you do that. But as I said, there are different time frames for different things. Especially the low caps, you've got to really monitor them. You shouldn't be buying anything and hodling the low caps unless you're on the computer. You're on it, you buy, you execute your trade, you get the hell out, right? Or you set up your stop loss, so at least that way you're not, you know, shit happens. So those are the ones that you've got to really, really monitor, or have all your stops and everything set up. Mid caps, not so much, depending on what you're buying. And then when you think there's a coming to the top, you activate your stop losses, and then, or you move your stop losses up. And then when you do the big boys out there, the more stable kind, or the more significant patterns, the bigger patterns that we can see, right? Those ones, you keep the stop loss wider, keep it open more, right? Because you are going to make a lot more. But always a good time to buy when the market's bloody. So those of you guys who are following me right now, I hope and I pray and I wish that you guys do come back to this channel during a bear market, because that's when you're going to enjoy it the most, right? That's when you're going to get the best advice on the entire freaking planet, because I'm going to tell you as it is, right? And you're going to make a shed load of money because of when you entered, right? the biggest strategy, the way you make money, is not when the market's pumping, is not when a bull market starts. Fuck all of that, excuse my language, but none of that matters. You make money at the bottom of a bear market. There's a range. You enter that range, you buy and you forget, and you sit back and relax and you say, right, I'm going on a cruise. I'm going on a holiday in a private island, right? That's what you think when you buy those deals. I'm buying a house, I'm buying a yacht, whatever, right? That's where you're going to make the most of the money. That's where I kind of shine the most, right? And, you know, that's where I will tell you, but blatantly, buy this coin. You would buy, no worries. You just, you know, you buy and you sit back and relax. So far, all of the people who have bought during the bloodiest of time, right now laughing. In fact, I just got invited for a meeting. There's about 150, 200 people. They gathered, they invited me to come over and go and have a chat with them, because a bunch of the boys who organizers, apparently they made a shit ton of money. I don't know on what, but apparently they made some money on some calls I did. So they invited me. I was like, look, if I got time, I'll come over. But honestly, I'm kind of busy doing other stuff, especially doing stuff with my own projects, because I've kind of mentioned one of the projects on the YouTube and social media and everything. But what I haven't mentioned is there's 2 others I'm also working on as well. So there's 3 different things I'm working on simultaneously. Plus I've got to manage my entire freaking day and my family and my life. So it's been hard. It's been hard. I'm not well, put it this way. I'm literally, and I don't advertise anything, but I'm literally sleeping with this, because if I'm ill, right? Overworked, underpaid, and sometimes I feel unappreciated, but it is what it is, right? I'm doing what I'm doing. But other than that, guys, look, I hope this video, Shahzad, sorry, I hope the video was informative enough, and I hope you understand the whole context of this video, right? I can show you charts, I can show you all of that. None of that matters. Your mindset is more important than the chart, right? Or the coins you're going to pick. Once you have your mindset fixed and you have these understandings about, okay, the lower the cap or the more lucrative it looks, the bigger the risk, right? You start to understand certain things. And then when the expectations are less, you tend to make more, right? And when your expectations are high, you tend to lose more. So don't have high expectation. Forget what the majority of the people are saying. If people are thinking everything's going to go to $1 billion, think the opposite. All right, you're going to be safer. That's all I want to say. Other than that, guys, 37 freaking minutes. Like, share, subscribe. We're going to catch you guys on another one very soon. Adios, my amigos.